Hello and welcome. This is BQ Prime. I'm Agam Vakil, and you're watching the FNO Show, a show in which we take you through all that is happening in the Indian derivatives market space. Well, at the moment, what we're seeing is some strength as far as the benchmarks are concerned. We had a gap up opening, and in fact, we are now looking at the Nifty once again reclaiming the 19,250 mark at the moment. We've seen some strength coming in the Bank Nifty as well, which is now well over the mark of 43,500. It's been a sort of a pivot over the past few months, and that's exactly what we are looking at the moment. Once again, the Bank Nifty shifting back about that mark at the moment. Well, let's very quickly also address what's happening in the options market. And for now, of course, until yesterday, we were working with a 500-point range in the weekly option space. But for now, we're now starting to see a lot more activity, narrow as far as your options are concerned. And at the moment, we are looking at a lot more activity around the 19,200 put and the 19,300 call. In fact, these are also the very options where we have maximum open interest in at the moment. Of course, this is likely to change over the course of the next few hours and the next few sessions. But this is, of course, for the 9th November expiry. Moving on to the Bank Nifty as well, keeping an eye on a 300-point range based on max OI at the moment. 43,300 on the higher end and 43,000 on the lower end is the kind of range that we are looking at. And of course, the options and the strikes between these two levels are the most active in terms of puts and calls. But the real question is, where do we go from here, and how do we address markets based on the kind of up move that we've seen in today's day of trade? Do remember that before yesterday, we also had sharp falls in those two sessions. Well, to understand all of this, we are in conversation with Raj Deepak Singh. He's a derivatives head at ICICI Direct. Raj, good morning, and thank you so much for joining in. Let's start by taking a look at what you're making of the markets in general. What's your view here?
Morning, Agam. Thanks for having me today. Well, Agam, if you'll see, from mid of July, okay, so FIs have been almost out of market. They have been selling. And what has happened in October when we closed the month near the lows, they have been aggressive sellers. Now, moving into November series also, they haven't changed their bias. What we have seen in last couple of sessions is just a recovery from the lower levels. But from the F&O point of view, if you look at the data, then their short positions is continuously rising. I wasn't expecting that even after a move of 400, 500 points from the low, they should have cutting down some of the short positions, but they haven't. And as of now, they are having in index future almost 1,75,000 contract shorts, net shorts. So they haven't closed their short positions yet. They have winded down some of their shorts in the stocks, but in the index, they haven't. And my all premises for the market is from the short covering perspective. If market has to move up, FIs have to come and close their shorts. So as of now, till yesterday, it hasn't happened. FIs have been remain net seller in the cash segment as well. So I believe if you are holding above 19,000 levels in Nifty, then perhaps a round of short covering, a bout of short covering to 19,600, that is very much likely. So I'm just hoping for the short covering, which hasn't panned out yet. But that's the view that we should look at the short covering in the market, and we might extend this up towards 19,600.
A very pertinent point put across by Raj, considering we are looking at selling in the cash markets. And as far as their index futures positions are concerned, they are still heavily net short, which means that short covering could potentially come about. But the question then is, Raj, that if you have this view on the Nifty, would your view be on the Bank Nifty? Would that also be similar?
Definitely. See, the major laggard of the market was Bank Nifty, and even in the Bank Nifty, if you look at the private sector hybrids, they have been under pressure throughout the October series, and even in the up move, they haven't participated much. For example, HDFC Bank. So the overall open interest in the stock is over 15 crore shares. That's huge, and also at 1,500 call strike, more than 70 lakh shares are placed there. So that's a huge hurdle over there. So when I'm talking about the short covering, so I will look at only those stocks where there are significant shorts, and we can expect a round of short covering. So what I believe with the 13% weight in Nifty and almost 28% weight in Bank Nifty, now here onwards, without the participation of HDFC Bank, larger move in the market may not be that possible. See, it has been underperforming for last more than a year, may continue to do that, but looking at the data, what I believe that anything has to happen, it's through short covering. And for me, the best candidate which can take market higher is the HDFC Bank.
Okay, so well, Raj in fact has a call on HDFC Bank as well, as he's playing for a target of 1560, and he's keeping a stop loss of around 1465. Of course, it's been clubbed with the view on the Bank Nifty as well, and he is looking at an upside. HDFC Bank certainly has been a laggard, a relative laggard with respect to the rest of the markets. Let's also quickly address what's happening in the stock, futures universe besides HDFC Bank, which we've already, discussed. At the moment, in terms of gainers, what we have is Dr. Lal Labs. It's come with a steady set of earnings, but it's seen a substantial up move in its margins, which is why it's making a sharp 7.5% up move there. Apollo Hospitals also up around 4.5%. LIC Housing Finance potentially looking at short covering after substantial weakness that we've seen of late. Tata Motors, Vedanta, and Chola Fin also advancing in today's share trade. More gainers than losers. So overall, it certainly is looking like a day where we are starting to see some advances, some relief as well for a lot of bulls in the market. So coming back to you, Raj, you did talk about HDFC, but I believe you also have a call on PVR. Can you take us through that?
Once again, those stocks which are beaten down. So right now I'm just looking for those stocks. And secondly, after the good quarterly numbers, so stock has declined sharply. The reason being the stock was over leveraged. So somewhere around 1760 or 1800 odd levels, it has witnessed profit booking. And also the weak market conditions didn't help much to the stock. But ahead of the Diwali vacations and the low leverage which has been in the normal series, at least for the PVR. So perhaps it's looking for a fresh up leg. And in that scenario, retesting of the recent highs, that would itself give us almost 6 to 7% of up move in PVR. So that's why PVR. And again, a very small stop loss. For the overall scheme of the things, I believe Nifty shouldn't move below 19,000 levels now. So until unless we are holding those levels, we can look at the heavily beaten down stocks also, and PVR is one of them.
Right. Okay. Raj, before we let you go, just a final general question on the markets. Of late, of course, and over the last few months, the kind of trend that we've seen, and especially since we have seen more and more weekly options expiries being introduced into the markets, today, of course, being one as well, the Sensex options expiry. A lot of traders are now taking up selling straddles and strangles at the money. Of course, strangles will not be at the money, but perhaps a few strikes away. But that said, we're also seeing a considerable shrinking of option premiums. The question really is that while it may work on many days, on many other days where there could be a sharp move, it really doesn't, play out in favor of those who have sold these straddles and strangles. What's your view here, and how would you determine whether or not a day is in fact good to go short on these strategies?
Agam, there are two things which I'd like to say here. First, after 12:30 or 2, I believe after 12:30 on any day, I wouldn't believe selling options on that particular expiry. So let's suppose today is the BankX expiry. I will not sell options after 12:30 or 1. That is for sure. Right. We cater to the retail client. I'm focusing on them. So see, those guys who are able to curtail down or trim down the premium so much, they are very, very big guys, heavy option writers. So they are making or they are doing in lakhs of quantities. But we are our clients or retail clients, they are doing 1,000 quantities, 2,000 quantities, at the most 5,000 quantities. So in that scenario, if you are looking at selling option on settlement day for just 3 rupees, 5 rupees, or 10 rupees, that doesn't make sense to us. And obviously, those guys are well hedged. They look out for the butterflies or they do themselves gamma hedge. So that's fine for them. But for the retail guy, I'll definitely ask anybody who's into the market, and I have seen it with our own experience that there are cycles, and now with the 1% move, we have seen such a sharp uptick in the options. But at any given day, 1% is not a huge market swing. But because of this daily option settlement, we are witnessing such a sharp upticks in options premium, particularly on that expiry day. So to start with, I won't sell options on the expiry day after 12:30.
Absolutely. A very, very important point made by Raj out there. Of late, markets are not very used to that up 1% up move. It's not very often that we see that 1% up move. And because of the fact that option premiums have already shrunk so much, even a 1% up move or a down move could in fact completely displace your stops if you have, of course, put price stops in the first place. And it could perhaps also, change your trading plans quite substantially. Well, on that note, Raj, we thank you for taking us through your views on the markets. We'll also be signing out from this show for now, but there's lots more lined up. Don't go anywhere. Stay tuned to BQ Prime.